Welcome back to Trading 360. I'm Diane King Hall. Time now for the big three stocks, three charts, and three trades. Kevin Green will take us through the charts. And here to take us through the trades is Andrew Arons, founder and partner, Synergy Advisory Management Group. It's great to see both of you. Andrew, before we dive into the tickers on your list, I want to get a big picture take from you on today's market action. Does this honestly make sense in the context of the geopolitical tensions that we're seeing in the Middle East?
Yeah, I mean, we're trading in a trading range right now. And, obviously with the news last night, we saw the markets sell off. Looked like the markets were going to even sell off more. So I'm kind of surprised the markets are hanging in there pretty good. And hopefully, the markets will recoup here. And maybe we'll see some of that maybe by the end of today. So let's just see what happens with this situation. And hopefully we'll see how things materialize.
Okay. All right, Andrew. Let's start out with the first trade on your list. You've got Novo Nordisk in focus. You seem to be bullish on this one. I'm curious to know, what's behind that.
Well, Novo Nordisk was up quite a bit. It was up up to $148 a share within the last year. It sold off quite a bit. And, there's a big theme, obviously, going on. More than 100 million Americans have obesity. The weight loss drug area is projected to grow 10 times in the next decade here. So I think this is going to be great for Novo Nordisk. They're the largest. They have the largest market share at 62% here. And we're still in the early innings. And I think they're well positioned for explosive growth. And, there's obviously big benefits also with the drug in the cardiovascular area. And right now, as the drug has sold off, the drug company has sold off, we're starting to see some action by big institutions and hedge funds starting to accumulate shares.
Okay, so Kevin, take us through this chart because, when I look at Novo versus Eli Lilly, Lilly's been the outperformer compared to the two, but what does the chart tell us?
Yeah, the chart says that it is trying to form a bottom. It may have already done so, and it's trying to break out higher here. Obviously, the stock has been getting, hit, obviously, over the last year after hitting that $148 level. Once we got to that level, we saw a decent little gap to the downside. We had a little bit of a bear flag pattern taking place, and it's been pretty much selling ever since. But the reason why I say you could be a little bit optimistic is because back in around April, we had actually a little bit of a basing or a consolidation pattern, this channel that took place. And we actually broke out of that channel that I mentioned. That area of resistance now has turned into an area of support. We've also flipped the 20-day moving average, acting as an area of support as well. And I would look at the $87 level as your first major area of resistance for the stock. There is also on the volume profile a significant amount of volume at that particular level, which is another reason why it could be attracted to $87 and why it could also be an area of resistance. Next area of focus is going to be that $92.67 level. That's the 200-day moving average. RSI is looking good, making higher lows. MACD is in a bullish formation, 12 EMAs above the 26. You can see the reason why someone might be bullish on this name. This is something that might have based out, may have been a little bit oversold, and now some buyers have been stepping in over the last couple of weeks.
Okay, Andrew, before we move on to your next trade, can you tell us a little bit more about any follow-up thoughts you have on Novo Nordisk?
No, I'm looking for it to make a pretty big move here. And, I try to come up with stocks that I think could possibly make a 20% move. And I think that maybe by the end of the year, we're going to see that with Novo Nordisk.
Okay, all right. Let's move on to the next one on your list. You've got Disney in focus. Is the magic of the Mouse House back? I mean, to be fair, it's been outperforming the S&P 500. But what's your view, Andrew?
Yeah, I think maybe this time around we're going to see Disney start to make a move. I've been trying to call it for the last 6 months, here. And I finally think their earnings came out pretty good. They're starting to make some big strides here. And, they're still 40% off their all-time highs. So the younger generations are spending way more money than the previous generations on experiences. And that's where Disney is going to be focusing a lot over the next decade. And their domestic theme parks were up over 9% last quarter. Their operating profit was up 13%. They're going to be building a new theme park in the Middle East. And they recently took full control over Hulu with over 180 million subscribers. Disney's also going to be offering a new direct consumer ESPN streaming service, which should bode well for people that are only really interested in the sports. And I think the strong company leadership, along with cost cutting, should really help Disney. And I finally think we may be seeing a turnaround here. The stock kind of bottomed, in the 80s and has making a pretty big move here in the last month and a half. And, when we see Disney move, it usually moves up pretty quickly. And again, there are a lot of people accumulating shares here at this point.
Well, I've definitely seen some moms in my mom group, like one of my online mom groups, talking about and trying to price it out. And some of those moms are certainly younger moms in that group. But KG, does the chart reinforce what Andrew's talking about here?
You can make the case that maybe this time is the breakout. You have to have price really kind of confirm that. So what we actually did is pull back and looked at a 3-year weekly chart to give us a little bit of perspective, because the daily probably is a little bit misleading here. If you kind of look at this current level that we are trading at, or getting very close to, that $122 level has been an area of resistance for the stock where sellers have actually stepped in. And if you actually look at the top wicks of all of these highs, it technically is making lower highs at this point. That's really not a good trend, but it's had a phenomenal move off the lows of $80. And there's a reason why. That has been an area where buyers have stepped in before, especially if you're looking back at October 2023 here. RSI, if you're kind of looking at it once again, making lower highs, but the trend right now is the primary trend, if you're looking at the daily, is to the upside. I also don't like the gap that we have here on the weekly chart. Gaps usually do not last too long on weekly charts, and that's between 106 and 109. The reason why I said you can be bullish, though, that 200-week moving average, a very key area, or a very key moving average here on weekly charts, has been broken, and that has not been broken throughout this whole cycle over the last 3 years. That is your bullish take there. MACD is also in a bullish formation. So I understand the bullish take, but you got to have the stock break above 122, sustain above it for a true breakout. And even if it does that, you probably have a lot more room to run to the upside here. So you have to have kind of a little bit of a risk reward. Take a shot at this level, or do you wait for that confirmed breakout? Kind of just depends on your risk tolerance.
Andrew, then I would just want to send that follow-up your way. Then are you watching for that 122 level in particular?
Yeah, we'd like to see the breakout over there, obviously. But if it does break, I think we're going to see some big moves ahead here.
Okay, let's talk about the last trade on your list, Andrew. You've got Whirlpool on your radar. It is higher today, but it has been an underperformer year to date compared to the S&P 500. So what's your view here?
Well, I was on the show a couple weeks back pushing it, in the high 70s, and we're now here in the low 90s, making a really big move here. They have a large domestic footprint here. I think the tariff policies should be a positive for the stock. Hedge funds are accumulating the stock right now, and the stock is down still 60% from its 2021 highs, yielding an 8%. In this market right now. I think if rates go lower towards the end of the year, which we suspect, this should all work well in favor for Whirlpool.
Okay, well, you have one analyst take out today, B of A upgrading their view on Whirlpool to neutral. So they've gone from underperform to neutral, and they raised their price target to a little beyond where we are now. Kevin, take us through what the chart looks like here.
Yeah, you could tell that he has a trend when it comes to the stocks that he likes to pick and the chart setups. And I actually like this one. Whirlpool obviously had a decent run last year, but we did see a pretty aggressive fall starting in February with the broader markets. But the reason why I actually like this, you actually see a nice basing pattern. You can even call this a double bottom, but we have this cup and handle that is potentially going to be forming here. And this basing, you don't really have an area of resistance that you have to worry worry about until you get to around that $95 level. And then you're focusing on that 200-day moving average, which sits at around $100.28. RSI looks really good. MACD crossing above the 0 line, 12 EMA is above the 26. That's bullish as well. So just looking at this chart, and you took the name off of this would actually look like a pretty decent play, at least to get up to that 200-day moving average before it may get a little bit hairy, but a decent setup here.
Okay, Andrew, final word to you on any of these, Whirlpool, Disney, or Novo Nordisk.
I'm very positive on all three right now, and I think they're going to make nice moves, in the coming quarter here. So let's watch out and we'll see.
Okay, I look forward to having a conversation again with you about these three, see where they are. That's Andrew Arons, Synergy Advisory Management Group, and our very own Kevin Green.